Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll top wire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. But the markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. How's it going? Oh, you know what? We should turn the music on. I totally forgot about that part. Let's just come over here real quickly. Let's just keep it kind of chill. Anyways, welcome to the day where we sit here and do nothing because Pelosi hasn't landed yet. So according to some news outlets, she is anticipated to land at around before 9:30 Eastern time. So that's basically where we're at. Lol, China. I know. I obviously I can't hide it, right? I'm a little miffed that the market is completely focused on this Pelosi thing because I really do not believe that anything is going to happen. I guess I don't know the future, but this sort of trade where you're like long based on Pelosi dying is like never works out. Okay, so I'm not going to touch it. Let's come over to the charts. So you can see here yesterday, the treasuries, they were starting to move down because the Federal Reserve is saying, hey, market, you're interpreting our position incorrectly. But they move up because of Pelosi. But I think that they're also moving up because they think that the economy is in a recession right now and that the Federal Reserve should be backing off of raising interest rates like now. Like, honestly, if you look at everything, what's the thing that's going to cause the Federal Reserve to like pivot? Right? How bad does it get until like you have to pivot? And then when you start asking yourself that question, then you realize, oh, well, if the economy's already in recession, it should already be. They're already to that point. It's just now it's at what point does it become obvious to everybody else, right? So I do think that the market is playing that game right now, and that might be a large part of the upside pressure as well. In the S&P 500, you know, we kind of wrangled things out, but right now we're a little bit lower here on the overnight session. Oil took a pretty good hit yesterday, losing like what, 5% oil? Well, I mean, they're still within the range, but I thought that was one of the more interesting moves yesterday, right? Gold and silver, man, gold and silver just continue to look really good. Copper kind of back and down a little bit, and then we got the dollar. So we did see, well, it's kind of interesting that we didn't really see like significant dollar strength yesterday off of all this. I would have thought that if anything dollar would have been strong. And we got the Bitcoin kind of falling yesterday. So that's where we're at. Ooh, I like this song. How to trade on ladder. Any ladder trading. Okay, so I use Jigsaw Day Trader. There is a $100 off coupon in the video description. So the way that you trade on the ladder is you look at a number, and when it looks really, really good looking to you, you know, like I'll just do a sim trade. I don't think that now is a very good time to trade. Okay, but we can just, that number at 2.8 that looks so pretty. And you just click it. You see, I just click. If I want to buy it, I push the blue. And if I want to sell it, I push the red, right? We can do all of these, right? I just click the numbers. Super fun. There you go. Just made $15 in fake money. It's that easy, folks. I wish it was always that easy. I'll take that again. Blow my nose here. Hold on. This track is called Low Key Free. I liked the guitar bit. Decent subs, but so all of the joking aside, what I'm actually seeing right here, so we're below the high of the session, and I can see low latent liquidity. So yeah. So did you see how when they would tick up, there's only like 50 on bid, 50 in offer? Go, like, you could go back and watch it on replay, right? Now that's kind of unusual. Like, I'm looking for a liquidity hole. That's not where you would see the liquidity hole. So that's a good place where I should be able to, you know, pull out a few contracts, right, on anticipation that they are going to break the high and that there's going to be a stop run when they do so, and they did that. So now that they've done that, look, area of low resting liquidity again. So I'm going to take a contract off. I'm going to take 2 contracts off, actually. Okay. Because once you get that area of low resting liquidity, number one, it's probably going to trade across that multiple times, right? So it's kind of an area that I can kind of try and get something out of that range, essentially. But I know what the general, you know, I also kind of have a bias that is going to be long here. Like, I don't think anybody's going to be selling this until they know that Pelosi has landed, right? So, oh, you know, I wasn't paying attention. We didn't get, yeah, okay. Let's see here. So one of the, oh, okay. Feds Evans is going to speak at 8 o'clock my time. So in 90 minutes, Feds Evans will speak. So the Federal Reserve speakers is where we got to be a little bit concerned that we might see some selling off of that. But until then, I think that you're likely to see the treasuries continue to see a flight to safety bid. And the whole play about, the economy is falling apart, yada, 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 right? But anyways, when I see an area of low resting liquidity, especially in a market that's moving around as much as it is right now, it's a pretty good chance that I'm going to be able to take a tick out there a couple of times until they decide to blow it out the top. That was a pretty spectacular stop run, wasn't it? I wonder if I can go back and pull out a recording out of that. That was pretty funny. It worked out so perfectly. Is this platform provide zero commission to trade? No platform does in futures, because you can actually make money in futures, unlike Robinhood. No, just kidding. But the futures trading is a little bit more serious of a business. You know, there are people that make a living from market making. Probably not any of us, but you know, there are people that do it. So there's always a commission for your broker. For these for the 10-year treasury that I traded there, it's about $2.50 round turn, I think, something like that. And for these micros, it's about $1 round turn. So you do have to pay a commission. I pay $50 a month for the Jigsaw day trader platform, in addition to the initial purchase. So yeah, there's and then you have to pay in the end, it ends up being about $50 a month that you have to pay for the market data. So it is not free at all. I kind of wonder if you'll ever see a setup like Robinhood, where there's commission-free trading and tons of people flock to it because of that. But honestly, the commissions probably not what's preventing you from trading, right? Like if you come in and the commissions are too much, you probably don't have a good trade, right? Well, I'm thinking about what I want to do here now with all of that. Could come back to the scene of the crime at like 28.5. The volume is a little, the liquidity in the 10-year is a little off. You see that, like, there's 1765 at 31, and then there's 891 at 31.5. Then there's 2188 at 122 even. And then a couple more low rises, and then more at 02. Like, that is really bizarre for the liquidity to be that randomly distributed, seemingly randomly distributed. So I'm kind of wondering what's going on there. So let's come back down through here and see if there was anything we missed on Twitter and so forth overnight. On the uncertainty associated with this new stage of China-US tensions, there's a lot of speculation on whether and how China would respond to what officials there said they would view as a provocation were US Congress Speaker Nancy Pelosi to visit Taiwan. This is understandable, as a range of possible Chinese responses also include economic and financial measures that impact both the demand and supply side. Most of these measures, and especially the more powerful ones, involve unfavorable spillbacks to China, making the calculus even more complicated at a time when China itself faces considerable economic and financial uncertainties. As economists know, interdependent utility functions render the analysis more complicated, says Mohammed A.L. Arian. I really hate the commissions for micros, not feasible to scalp them, sadly, so I'm just going to fund my account more when I go live. Any secret? Well, I have lots of secrets, dude. I can just give you the whole game. I can give you away the whole game. So here's the whole game, okay? You want to predict orders. That's the whole game. Predict orders. So markets are more statistically efficient than they are informationally efficient. What does that mean? Man, am I gonna give this? I'm just gonna bail right there, man. This came back so much harder than I expected. Oh, I lost about half of my profits, but that's okay. It was just a demonstration anyways. Markets are more statistically efficient than they are informationally efficient. Let me break down what that means, because I know that probably sounds like something really, really complicated. So if you see a pattern, if you look at a chart and you see some sort of a pattern, okay, market is really good at eliminating that pattern and making it so that whatever you're looking at is just random, okay? But if you want to say, what is the real true fair value of this thing, right? If you could calculate it, of course, you can't calculate it because we don't all agree, okay? This is not a number that we can actually, you know, put into a bunch of math and get an objective, you know, a number that everybody agrees on, okay? But if it did exist, the price of the market would never equal that number, okay? So somebody could come in and they need to buy a bunch of treasuries, and there could be no real good reason for it, right? Like they need to rebalance their portfolio at the end of the month. Okay, so that has absolutely nothing to do with the fundamentals. Has nothing to do with what's going on in the world and what the supply and demand for that thing is. Is just that's the way their strategy works. They have to rebalance at the end of the month, and that can move price way far away from what that intrinsic value would be. That number that we could calculate what it's really actually worth. Okay, so that means that the market is not informationally efficient. Okay, they say the market reflects all available information. It does not. It does not. But it's really good at eliminating statistical abnormalities. I keep using big words. I'm trying to get myself away from using big words, right? There's really good at eliminating those statistical patterns. So that's what we mean when we say the market is statistically efficient, but not informationally efficient, right? So what actually moves the markets is the orders. And if there's anything that we can find that is effective at predicting the orders, that's what we want to use. Now, one of the things that is the most effective at predicting orders is breaking news. Okay, so breaking news sentiment. So in the instance where I took that trade, I wanted to go long because I knew that the orders in general were going to be long because of Nancy Pelosi. Everybody was speculating on whether Nancy Pelosi is going to get shot down by China or she's going to land. So we got like what, 3 hours? 3 hours to sit here and chill and ask, has she landed yet? Limit orders move the market? Well, that's not strictly true. So this is the whole thing with limit orders is, I think, really, really interesting. So in the kind of move, like in general, for you as a retail trader, when the market orders are dominating the market, those are like the best times to trade. When the limit orders are dominating the market, it can be really hard for retail traders to make money. You'd think, oh, well, it's fine. You just trade with the limit orders, right? But the limit orders can, it's not a fair game. It's not a fair game. If you come in and you say, okay, limit orders are in charge here. They're going to be absorbing here at this spot. So I absorb too, right? Here's what happens. The limit orders, they look at it and they say, oh, Hulud, he bought there at that price. So we should remove our bids and let it go down 2 to 4 ticks so that he'll stop out. You can't win that game. But that's because when the market maker is in charge, he just reacts to what the volume is out there. And in the end, he is going to pull out his profit, right? Based on the models that he's got, he can react to the volume, right? So I would rather trade against the market maker in a situation where I know it's favorable to me, when I know something that he doesn't, and I'm trading against him, right? So that's why I say it's a lot better for the retail trader to trade when the market orders are dominating the market. But how do the limit orders kind of do this? What they'll do, or we'll call it, I think people call it painting the tape, right? What he can do is he can say, well, I'm the market maker, and I am long. Let's just say that I'm a market maker. I already have inventory. So I already have inventory and I am long. Okay. So then it would be in my best interest to see price move up. So what I'm going to do is I'm going to put stronger bids and weaker offers. Essentially, if it ticks up, I'm going to make it so that it requires less orders for us to move up than it does for us to move down. Now, there's big risk in that, right? Because what if there's a reason for it to move down and they push it against me, right? Don't want that to happen. But that's basically how they can paint the tape, right? And when it's a quiet market, I'm a little surprised by how effective they did at selling this back. But that again appears to be market making. Like, did not take very many contracts for us to slip back down through here. The largest trade that they had was 500, whereas we were seeing thousands when they broke out there, right? And look, there's like multiple 5Ks traded up there above after they broke out. So the breakout was at 28, right? So they do not pick. They absolutely do. They absolutely pick sides. I'm telling you, they look at their inventory and they modify their limit orders based on their inventory to make it more likely to go to their price. 100% they do. Just do it this way, okay? Here's how you can test this. Come over to the 5-year micro treasuries and wait for a situation like right now where like literally nothing is happening and nobody has traded anything, and then go and put a trade in. You could buy well, I guess we're seeing interest rates declining, so you'd want to sell 2.613, okay? I could almost guarantee you that if you sell into 2.613, okay, that 5 lot will not disappear. It'll still be there. Well, it might disappear for a second, but then it'll come back. And if anything happens, that 1 lot at 2.625 above us will pull, and it'll move price against you. I'm telling you, they make it easier to move against you. And you can see it very clearly when you're like the only one in the market, how that algorithm works. Like, the whole thing is the market makers do not pick sides. Sure, but they end up with inventory, right? If they end up with inventory long or inventory short, they modify their best bid and offer to account for the volume that they've already seen out there in the market to essentially make money on average 1 tick per contract. It's the way that they work it out. Quite frankly, when I did that example trade, that's part of what I was doing there, right? Did you notice I didn't really... I was buying a ton down here. I didn't take my contracts off up here. Not until I saw some things in the volume to tell me to get rid of my inventory, right? Because I don't want to make it harder for them to move up through. This is also why, like, if you take a trade, let's say I take a long here, and you have an auto take profit stop sort of a thing. When you're a 1 lot, it's probably trivial as to whether, but you don't want to put your limit order up there. You're making it harder to get to that price, right? Let it get to that price. Put the order out there as it's trading, so that they can't see what your intentions are. Anyways. Oh, I missed this comment by Sharp, but the micro yields seem cool. Could swing. Yeah, I really think that there could be some real opportunities for us in the spreads. I haven't quite found the so like from the perspective of like the what do we call this, the credit cycle, the yield curve cycle. You know, you just go flat unless like the Federal Reserve is actively pivoting, and then you'll see steepening. But generally speaking, you just go flat and you make money. Right. But what I'm looking for is some sort of statistical measure I can see in the spreads that would give me a short-term location to go flat. Do you use an automatic stop entry, right? Or do you do the same as profits? Well, so with your stop, they can't see your stop, right? they can't see a resting stop. Rather, they might be able to tell when your order came out that it was a stop, but they can't see your resting stops, not on the CME at least. So I think that you're perfectly fine if you want to put an automatic stop out there, you know, so put it there. Okay. But the thing with that is that generally speaking, the wider your stop is, the more money you'll make. That's just kind of the way it is. And especially if your stop is less than the average true range of the instrument, you're basically have a really high probability of getting stopped out of your trade just from random noise, right? So it has always been the case, and this is kind of an odd conundrum that, you know, backtesters just absolutely hate. This is, the closer your stop is, the less money you make. Strategies always seem to work better if there's just like no stop whatsoever, right? It's just all in, all out, yield it, and those seem to work better than you come in, I want to make 4 ticks, lose 4 ticks, right? So that kind of trade from a automated trading perspective is really hard to, I have to say, like if you find a strategy, yep, but with wide stops comes losing big days as well. Yep, exactly. So it's like, the reason that it does that is that the more risk that you take on, right, it means that you're more likely to get a win out of it, but when you do get a loser, it's large. In other words, you're increasing your left tail. You're looking at statistics, right? You've got a distribution like this, and it's normal, right? And then you say, okay, I'm not going to have any stop. Then what's going to happen is you're going to have more winners, more small winners over here, right? So you're going to move things over, but your tail is going to be way longer, and your right tail is not going to be as wide. So yeah, doesn't work in the long run. But I would, the way that I prefer to trade, and especially if you're doing some sort of market making strategy or noise trading strategy, I would put your stop somewhere where it's just extremely unlikely to get hit, right? So when I'm doing this in the micros, I don't, the stop is like way, is far away, you can't even see it, right? And I have an idea of where I want to get out or where I'm deciding that I'm wrong, but I click out of that manually. Because I just don't ever want to be in the situation where I'm getting stopped out randomly. So my stop is far enough away that the only way that gets hit is if like a third Sigma event comes through and completely pushes the market away from me. And that stop is only there just to like protect the account, right? But it's going to be a ridiculous stop. When you look at these guys like that are market making like at the big banks, you know, if they were acquiring inventory at 27 and they were long, their stop would be like way down here at like 121.16, something like that. You take into account your position size? You know, well, for my live trades, I'm almost always all in, all out, and one contract most of the time. I'm sizing up. I've never had a situation where I really started sizing up and it worked well for me, unfortunately. So I've never had to deal with that problem. But when I'm doing it with, you know, like when I'm doing it with sim trades, I'm looking over here and I'm saying, okay, I don't want to lose more than $1,000 or $2,000 or whatever it is that day, and I'll start bailing. Well, like that's the thing, is that if you were a big trader, you can't just have a stop. Like if you're trading thousands of contracts, you can't just have a stop at 25. Like you're just gonna completely destroy the market if that happens, right? So you don't want to hit that in there unless it's like, you know, something really crazy happened. And that's when you'll see this move that just like the whole market pukes. Anyways, you want to look at it? Sure. You got a link for me? You could, probably the best way to do it. Okay, 130 trades isn't bad. Can you send it to me on Discord? Because if you try and post a link in YouTube, YouTube will just remove the link. Google Sheets would probably be okay. I really like the trade analyzer thing in NinjaTrader, but if we have to use Google Sheets, we can use Google Sheets, right? Because I don't think I'm actively trading this today. You can see this market is not. That whole sweep up, I was surprised that played out the way that it did. But now you can see the market is kind of like, yep, we're not going to do anything until Pelosi lands and Federal Reserve speakers come in. If you start with 25K on one contract, add one contract every 10K in profit. Yeah, there's a couple of ways to do it. I would recommend, here's what my recommendation is. Not my recommendation. The way that I like to do it is I like to have the full margin. So like if the full margin for holding a micro treasury yield future overnight is $264. So like every 250 in profits, then I'll add a contract. I don't like the trade analyzer in NinjaTrader. It always tells me how bad I'm doing. Right. You know, I know you're joking, Steven, but like I really think that a large portion of retail traders get into that. Like most of the technical analysis people that I've worked with, they'll say, here's what I'm doing. And I'm like, oh, okay, that's great. Let's backtest it. They're always like, you know, it's just like they, because they know that it's probably going to be a loser. I have added contracts, but like the thing is, Collude, is it seems like every time that I do that, it quickly falls apart on me. It's like usually by the time I'm putting contracts in is about the time that I'm ready to blow up. So I've kind of become really nervous about adding contracts. But I've gone up to like 3. I think I've even been up to 5 at one point. So I feel like you've been on one lot too. Well, yes and no. Like here's the thing. I gotta tell you, this is just the most interesting conundrum in trading. Is that again, the larger your stop is, generally speaking, the more money that you can make, right? And this is just because you're playing around with the risk. You're playing around with the distribution, right? So what you're doing is you're trading win rate for kurtosis, essentially. Oh, it says I have to request access to your link, Oliver. You're trading your win rate for kurtosis in your returns, etc., etc., etc. So what everybody does is they'll like all in, and then they'll take sequential profits, right? You get in, you take like 3 contracts, and then you take 1 contract off at 4 ticks, and you take 1 contract off at 8 ticks, and you let the last one run, right? When you do that, and you have your stop at 6, for instance, right? When you do that, it really increases your win rate, right? But really what it's doing is it's just kind of making it so that you have to have more data to really see how you're doing, right? And that can kind of like fool you, right? Because now you don't really know like if you were right or wrong, right? Because you're making a lot of money just from noise. Right? And eventually the risk is eventually the market comes along where you just lose every time and you have a 10 loss streak that just seems incredibly unlikely statistically unlikely to happen and yet always seems to happen, right? And then you blow your account. Whereas if you're doing like equal risk reward, all in, all out, right? If I'm all in, all out, I have to be accurate. I have to know what's going to happen. I have to understand how much volume can come through and understand what the volatility is, right? All in, all out, you make more money, it's harder. But if you're doing it and you're doing it well, then you know that it's really you, right? That you're actually trading well and that you're effectively predicting the future orders. So I think that if you want to get good at trading, you should be all in, all out. And the number of contracts that you trade doesn't necessarily matter, because it's more about how good are you getting at this, right? I think the reality is that most traders are going to lose money, right? So you all in, all out, and then at the end of the year you break even, you're doing really well, right? Should come quick. Well, I would. So I had just this is like a new account, Kalut. I just switched brokers, so I just want to stick with one contract with the account that I have until I've made a little bit. And the start hasn't been good, right? The first two days of trading did actually. I mean, I kind of sat on it for a few weeks before I started trading it because I didn't like the action before that. But first 2 trades were losers, so no sizing up yet. No sizing up yet. If you are profitable, why would you change? Adding one contract is just changing the number. Yeah, well, that's not true though. I mean, number one, it is a mental game once you're adding 2 contracts, right? And if you don't have double the amount of money in your account, really what you're doing is you're taking on more risk, generally speaking, right? Like if you start with a $500 account and then you make $250 on micro contracts and you add a second contract, right? The amount of risk that you're taking per trade is higher now, right? It's higher until you're over $1,000 essentially, right? So that's the first thing. So it kind of affects you mentally. Your drawdowns could hurt more. But the other thing is that the more contracts you trade, the more the market will respond to you. And most traders are not working from a position of my actions have an impact on the market, and that changes how I have to trade, right? And you would think it doesn't matter, but you'd be really surprised how quickly it can get to that point, especially if it's a slow market like right now. If like 10 to 50 lots came through on the micro treasury right now, I think that it would have an impact on this thing. Would probably try and stop them out. It might move in their direction a little bit, and then if it doesn't continue from there, then it would go and try and stop them out. I would. I'm telling you, man. Every contract has a measurable impact. And 10 in this kind of action, I mean, we could go and do some math on it, right? Obviously, the impact wouldn't be a ton, but... Well, it's not that it hunts you, though, Kulud. Like, you understand, like... This is the thing that I spent such a hard time, long time thinking about and dealing with, because I felt like it was hunting me, right? It's not hunting you. They don't have to hunt. The market does it on its own. Could trade a 25 lot on the ES. If it was like If it was after the open, sure. If it was after the open, you could trade at 25 lot, yeah. Right now, actually, let's add something on here. Hold on a second. I could give you like the maximum number of contracts that you could trade right now in ES. Kind of depends on what your stop and target is. Okay. So like the maximum that you could trade right now is 2,000. But if you were like writing an algorithm, right? And you were trying to right size, you would probably want to do a small fraction of that. So let's just say you want to do 50% of that. Okay. 1,000 contracts, right? But again, you would only want to trade those 1,000 contracts if you knew that it was going to move to a location. So if the orders don't come in after you, you're going to get wrecked. You're going to get wrecked. Right? But 1,000 would be like the maximum that the market could support. Why would you? Because that's the math of it, Kalud. But what I'm saying is just if you have 1,000 contracts, okay? No, you're not listening. Okay, if you have 1,000 contracts, that is enough of the volume right now that you would basically dominate the market, right? If you had an edge, then that is the maximum amount of money that you could make, right? If you knew that it was going to go to, like, if I knew that it was going to go to 40.98 right now, it's 40.94 right now, right? If I knew for a fact that in the next 5 minutes, it was going to go to 40.98, if I trade more than 2,000 contracts, I will actually be reducing my profits, okay? 2,000 is the optimum number of contracts that you could take in that situation to make those 4 points, okay? But really, that's going to have a strong, that's like, you're trading like half of the volume at that point. So you don't want to do that. You want to be at least half of that, okay? So I'm saying 1,000, okay? So if you just say 1,000 contracts is like the biggest that you could go right now, what does that say about how much impact you would have if you're like a 10 lot, for instance, right? So does that like completely dominate the market or anything like that? No, but on average, because of the way that the market making algorithms work, on average, you're going to lose on average 1 tick per contract. And the market maker is going to make on average 1 tick per contract. That is if you don't have any edge, right? It's not incorrect. It's math. Should we go through and like do the math about it? Would that help if you understood? Like you need to understand that even with your 1 lot, your impact on the market is enough to make the trade a losing trade unless you have a real edge. Okay. So in a market like right now, what are we trading off of? What reason do we have to believe that we're going to effectively predict the orders, right? Because it crossed a moving average or something like that. That's not very effective at predicting future orders, right? If I have news that not everybody else has, or I understand the sentiment in the way that not everybody does, I might have a good chance at getting a trade that works out, right? But otherwise, on average, I'm going to lose 1 tick per contract. That's the way that the market making algorithms work, right? Right now, maximum that I would be comfortable sizing up in this market with ES contracts is 1,000, okay? And that was if I was like the biggest trader, right? So if the biggest trader can only put on 1,000 contracts right now, what does that say about how many contracts you might want to put on right now, right? Even if I had the ability to size up, like let's say that I could trade 5 E-mini contracts right now, I wouldn't be putting on all 5, right? I'd only be putting on all 5 when I'm in a market where I know that there's a lot of room for me to work in. This market, it's tight. So you don't want to do that. Think about if you go in and you say, I'm a 1 lot, okay? Every lot has an impact, okay? And you just think, what is your natural intuition about how much impact my 1 lot will have? Times it by 8, and that's how much it actually is. He hasn't responded to it, so I'm gonna wait and see what he says, and then we could go into the math if you want. One mini is more than, yeah, that's true, NASDAQ killer. You don't really need to size up that much. Like that one of the reasons that what I'm telling you is so important is like when you're on 1 lot, it doesn't really matter. But the reality is that if you have a profitable strategy that allows you to continually size up, you are eventually going to run into the limit of your impact. You will. And so you need to, it's too early for math. I gotcha. It's really cool math, I have to say. It is. I should just make a video about it because it's just astounding to me that retail traders are never taught this. Well, so I would. What I'm saying, Kulud, number one, is that I wouldn't, if I had the ability to size up to 20 lots without changing anything, I wouldn't be trading 20 in this environment. You get what I mean? Right? I'm going to wait until Nancy Pelosi lands, and then when she lands and the market starts selling off of it, then I'm going to hit them with my 20 lots, right? Right? That's what I'm trying to say. This is a market where your impact matters more, and the market makers have a much stronger ability to mess with you. And I think everybody has this idea that, oh, well, but I can beat the market maker because I can predict what he's gonna do. Doesn't work that way. You always get screwed playing that game, man. I'm telling you. So I've done it so many times. You always get screwed playing that game. So I'll come in and I'll be like, oh, yep, they're messing around with the range. I guess I better buy at 121.06 or whatever it was. The open 24 maybe would have been a good place to buy. And then what? Up, it dumps way past you. So then you go, oh, actually, maybe something is happening. I should go short. And then that's exactly where it flips back around. Because there's not any real reason why it's moving. What's your math background like, Seth? Studying computer science right now. We only go up to LA and discrete math. The papers on AR, XIV have crazy math like stochastics and probability stuff. Yeah, so Sharp and Goose, if you want to become a quant, I would highly recommend like trying to double major in math or something like that, math and statistics. Because from what I've found, a lot of this stuff you have to get into advanced statistics. There's a lot of math that I don't understand. So try this. Nassim Taleb has a technical inserto, or I don't know how you say it. Inserto, I think. It's a free document that they posted on ARXIV, okay? On Archive. You read that book and see how much of the math in that book you understand. because I personally found it very difficult to keep up. I was constantly going back to Google and searching up things and looking things up. And a lot of it was math that I already understood, but I just forgotten and stuff. But it was bad. You overestimate your impact, but most retail traders underestimate their impact. That's the thing. Why does it matter? Why do I always pick this fight? I'll tell you why. Because retail traders do not realize the impact that they have on the market. And that is one of the major reasons why they blow up. They start sizing. If you get something and it works well, you start sizing up, you reach that impact, market comes for you and you get blown out. And that's how you get so many people that it seems like they've made tens of thousands of dollars and then they blow their account. It's because they don't know how to size trades. And retail traders misunderstand the nature of the market because they refuse to accept that all orders have impact, right? They fail because they over leverage. No, there is a number. You have to be able to size your trades. So like the whole thing here is that as a retail trader, you come in and you say, okay, I am going to find a pattern in the market, and that consistent pattern that I can see in the market, I'm going to trade that 3 times a day, and that's how I'm going to make my money. Okay. So I'm just trading this one simple pattern that I've got. Okay. So then you come in and you think you found a pattern and you start trading it. It doesn't work. Why doesn't it work? Markets are statistically efficient. Why are markets statistically efficient? Because orders have an extreme impact on the price of the asset. That's why statistical inefficiencies get pulled out of the market so quickly, right? Anything. So if you can have a pattern and you're trading it with your one lot, then sure, you're fine. And again, what I'm saying here is that once you've found that trade and you know how far away it's going to be, because basically the gist is you got to be saying, okay, this is the price it's going to go to in this amount of time. Okay. Once you have that, you can calculate how much to size your trade, right? But then what they do is they go and they share the strategy with everybody, and the number of people that are trading it ends up being higher than that optimal number, because that optimal number is a lot lower than they think it is. Like I said, in the current market right now in the treasury, just think about it. It's gone down. So now it's more like 700 contracts. Would you believe me? How many of you would have said that 700 contracts on ES right now is the maximum number of contracts that you would want to have for a 4-tick winner? Right? Not a 4-tick, 4-point winner. How many deals do you make almost a day? Depends. If I'm doing well, it's 1, right? If I'm doing well, it's 1 and I just stay in it. If I'm doing terribly, then maybe like on my tilt days, I'll maybe get up to 10 trades before I finally tell myself to stop. So once you understand that orders have a strong impact, how should that change the way that you trade? You shouldn't come in and take a trade because you did a statistical analysis and it says that when X thing happens, there's an X% chance of Y thing happening. That's a dumb trade, because it's a supposed statistical inefficiency that the market is really good at getting rid of. And you're going to have a lot of evidence and a good reason to believe why that statistical inefficiency exists in the market and is not just something that's random, that randomly exists and isn't going to be persistent, right? So where does that take you? I'm not going to take trades unless I know what's going to happen. I say no. You want to have a really strong idea about what's going to happen. Right? Otherwise, there's no reason to trade. Otherwise, your expectancy is that you're going to lose. Oh, okay. I didn't see that you had messaged me again, Oliver. So, oh, you give me some. Okay. So it'll give me the profit and loss. It's not possible to have a strong idea, but yeah, it is. It is. Because the thing that's funny is that the market is not informationally efficient, right? So it's 100% possible that you might know something that is not effectively priced by the market yet, and that is going to predict future orders, right? You scroll to the right, there is more. Yeah, I saw, but most of it was like your total efficiency and so forth. Kind of interested to see, like, it told you what the high and low prices were and everything, which is really cool. Oh, max open loss. Okay, so that's your MFE and MAE. Is good. Profit and loss is what we're most interested in. So I think that we can, let's see here. Let's take it just into Excel. Okay. I think I have a directory called data or something. Back tests. There we go. Cumulative profit loss gives equity curve. Oh, okay, cool. I give you an example of something where unless we have information like Pelosi's husband, well, but you know something, Cyril X, right? Here's the thing that we know. I'm going to tell you something that could potentially provide an edge for you. It's going to be really hard to trade it, but it is a piece of information that we have that not necessarily everybody that participates in the market knows and could potentially predict future orders. Nancy Pelosi is reported to land at 7:30 Eastern time. Or sorry, not 7:30 Eastern time. It was 9:30 Eastern time, right? Was it? No, it wasn't 9:30. It was 11. It was going to be 9:30 my time. Now I have to go back and look at it because now I have myself all confused. Yeah, I said 9:30 my time, but now I'm questioning myself. So let's just come through here. But there's more to it than that. Okay. Oh, circa 9:30 Eastern time. So it's actually going to be in the next 10 minutes, supposedly. Okay. So that's number one. Number two is that we've got a Fed speaker at the top of the hour. At the top of the hour. Okay. So the first thing is if Nancy Pelosi don't get the thing that she landed, the treasuries might spike back up. But if she does land, then probably the treasury is going to sell off, and people are going to want to be short going into the Fed speaker, because the Fed has been pushing back against the market and saying, no, we're going to raise interest rates, right? So kind of the trade, I think, is I want to be short this market here. Question is just the timing of it, right? So there is, you can have a good idea. Unfortunately, it's setting up a trade against it is a little bit more complicated than just knowing the orders, because you kind of have to, there's kind of how do you play it tactically, right? But that is a piece of information that we have that is extremely predictive of what the future orders are going to be, right? And if we got a news story that Nancy Pelosi was just killed, then close your eyes and press buy on the treasuries, because those treasuries are going to skyrocket, right? Okay. So protected, enable editing. Okay. Oh, does it have to? That's kind of lame. But okay, whatever. Had to open up a new window for me, but okay. Oh, I thought it was over in here. Insert. There we go. Insert. It was an insert. Yes. No. Yes. Chart. Insert a line chart. Like this. Really? Well, it's going to be a military plane, right? You know what? I don't know what the hell is going on here. Why it won't let me do that? Now might not be the time to mess with that, because this has been, there was that initial sell outside of that range, but now they've extended. We are, I believe, into some of yesterday's prices. Yes, 121.12.5 was kind of the area that we were playing yesterday, so I'm kind of interested in it. Probably need to be paying attention now. I'm gonna refresh my financial juice page here. Make sure that I got that. Do you do scalping or intraday? I would call it scalping more. I really want to get in. I'm kind of wish that I was already long, but like way back here. I'm not sure if it makes sense for me to take a trade in this location with this timing, because we still got we're still likely to hear stuff and things are going to happen. Bill Dudley, the Fed hasn't pivoted, and unfounded market speculation is counterproductive because it could require even tighter policy. Ooh, okay. See, that's the sort of thing that I'm expecting them to say. Somebody hit back right there. It is a thin book. Below us especially, it's very thin. You know, in this situation, if I take a short trade and I catch a winner off of it, it might be one that I keep. Oh man, I was thinking about 2.6 and I didn't. Well, now they've come down into higher liquidity. So, ooh, look at that huge order at 0.8. There's a big one in ZF there. What are you talking about? The 225? Oliver, what I think I'm going to have to do is like after the stream, go through and do all the calculations to get the numbers that we want, because it was the spreadsheet was kind of like not cooperating. But I just have to troubleshoot it, and I don't want to do it here, especially when we're about to have stuff happen, right? So here's the S&P 500 is about to start trading. What else is going on here? 6J has been taking a hit through all of this. Gold getting hit a little bit, giving up some of its gains for the day. Oil flat. S&P 500 pointed to the upside, but within the overnight range. Here's the S&P 500. I'm not detecting any clear signs of a node. Notice how far they've been able to trend in the treasury. Okay, so we've got Canadian manufacturing PMI. I think I heard 52. 52.5 versus 54.6 previous. It's not a very good PMI. Yeah, no, of course, no worries. The sheet will be there if you need it. Yeah. Okay, so there was a bit of the pullback. Well, on this pullback, the liquidity has increased, right? I suspect that there could have been some robots that were like, don't trade until 7:30, right? I'm going to add a column in here with the search for Pelosi. Move it over here. I will switch the engagement to be that it needs at least 5 likes. Investing.com tweets U.S. Air Force jet reportedly carrying Pelosi delegation on track to Taiwan. Has a picture of it, and it is like on the way, but not there yet. For the first times, Pelosi's SPAR-19 is at a destination, but those 4 red lines in the sea, they are the 9-dash line marking the beginning of China's territory, supposedly. So I think that what I'm taking from what I'm reading right now is that the report that she would be landing at 9:30 Eastern time is incorrect. But it does sound like it will be here this morning. Yeah, I had a feeler that 9:30 was too early. Yeah, I mean, I was very much sitting there being like, I don't think they have the actual number. Like, I think that anybody so again, there's these other people on, they're saying, oh, this is her plane. And I'm sitting here like, there is no way that it's just a plane that everybody can see and watch, right? Like, if they're really concerned about the Chinese doing something, it's going to be on a plane that the Chinese can't see. Would be my guess, I guess you could say. We're just guessing at this point, right? One Times is saying it's emergency landing. The plane has mechanical problems, apparently. Yeah, SPAR-19, everything else. So I think the reason that they're following this plane is because it is an SPAR-19. It is a military plane heading for Taiwan. But I would be really skeptical about it, right? And more to the point of this action, the risk event is still out there, which means that we could still see spikes or pushes to the upside. So I don't, me getting all anxious to take a trade, really glad that I didn't, right? The downside trade doesn't look nearly as good now either, because the liquidity is a lot stronger than it was. At how easily it's able to tick back up. That could just be the flight to safety traders taking hold again, right? All flights are available. There are no secret invisible flights. Sure there are. If the U.S. military put her in a stealth plane, they wouldn't see it. I don't think that they have a stealth, what do we call it? Cargo. Yeah, it would have to be a helicopter, right? It would be a helicopter. Be a chopper. I mean, I'm not a military expert, right? Wish I was. It would be useful in this situation, wouldn't it? Maybe having an escort with her is enough. I don't know. More liquid asset equals less volatility. Yeah, well, it's not just that, Cyrilex. It's that we saw a noticeable change in the liquidity when it hit those prices. And it was they kind of bounced off of where the breakout from yesterday occurred. And then these risk up traders took control. So the bigger thing going on here is that we have some evidence of a competing meta order. There was a short meta order that happened well before I anticipated that it was going to happen, because I thought that they would hold off until after she landed. But yeah. It's the exhaustion of sellers on ZF. I think maybe you could call it exhaustion, sure, because it didn't look to me like they necessarily fell into their impact. It was just like there weren't any more orders, right? Plus a large order on the bid. I would not read too much into the big order on the bid at 25 in terms of like that should be a reversal or anything. It's kind of more of a curiosity that it's there. Could be somebody that's short and they're just advertising, hey, I'm gonna get out. You could sell here. Maybe. Given the context of a strong trend down, those big orders down below us do become like targets in a trend, but the action right now is not suggesting to me trend down day. Well, my news squawk has been completely silent. Anyways, but the thing that I do see is that they did stop. We had to move back up. A lot of liquidity. The liquidity was more confident at being placed here on the move back up. There was at least some of a meta order. So there is a possibility that we continue back up and that they make it back, let's say the open, right? So if I'm interested primarily in a short today, clearly now is not the time, right? Even we could have taken it earlier, right? But then we would want to have been out of that one. So that's not the short that I can just hold all day. Okay, Taiwanese media writes that the plane with Pelosi will land in 25 minutes. See, these guys are posting the pictures. I don't know how they're doing this. Flight Radar 24. Real-time flight tracker map. Looks like the internet is hugging the website to death. Good 3 ticks down there. Let's see if I can find it. There's a good 3 ticks down there. Even though the liquidity, let's reset things. Even though the liquidity is better, it's still pretty slippery, right? If she is flying Delta, the plane will run out of fuel after an hour, like my flight last month. Oh, that was funny, dude. What do you get with the upgrade? You're right. I don't see nothing. I ain't seen nothing. Oh, no. The flight that they were looking at was right in here. Hmm. 8 U.S. warplanes are accompanying Pelosi's plane. Most tracked flights. View map. List airport fleet radar. Multi. Map. Oh, probably it's on radar, and I would have to be a subscriber to get it. I think that's what it is. I think that we can't see it because we're not a subscriber. We'd have to upgrade to Flight Tracker. Man, I reset it and they come back down again. Whoa, what? Am I this story for real? I need to verify this one before I say this live, okay? This is not related to Pelosi. Where's he getting this from? Man, they sure came back down to the lows easily, didn't they? Think they're gonna extend it a little bit? Think they could. That's very interesting, but after trying to find any credible sources, I just can't find anyone who asked. Yeah. I'm gonna put this one as rumor and not share it. It's not news that would affect the markets, I don't think, but it is very interesting political background. Okay, I guess they were getting Red Book right there. Evans is still speaking at the top of the hour. Jeez. Look at them, they're in the micros. They're just busting their balls. Wow. Wow. Okay, that's a little unusual volatility. Something's happening. Okay, Fed President Daly, work on inflation is no, we are almost done. We are still resolute and completely united on achieving price stability. That must be what's moving them there. That was not the one they were expecting at the top. There's now my news squawk is recording it. Well, I think I missed out on a good $30 there from being too cautious, but this thing is going, man. Look at that. Look at the forcefulness with the orders too. I mean, the bids didn't pull out of the way. They just plowed right through them. Fed Daly is saying we're getting too confident that we've already solved the problem, and that would be a mistake. Oh, that is quite a hawkish comment, in fact. Price pretty slippery in the 10-year here. What was that on the ZF for those who are watching the tick stream? Oh, I don't remember what. There was a big 3K 300 lot there, right? I think we already are along through that. And we busted through the big order that we had in the 10-year as well. So we're well into yesterday's prices now. The low from yesterday was 120.27. So, you know, next big stopping price, or not stopping price, but like benchmark for the treasuries is probably 121 even, right? I can't believe that we were at 122 at the beginning of the day. By the way, this is steepening. Oh, no, wait, it's not steepening. It's flat. It's flattening? What? Okay, overall on the move, it's flattening, but that last tick down, it's flattened a little bit. I guess you could say the 30-year is getting hit by this more than it normally would, even though it's still flattening. Look at her go. 5 years just getting crushed. Okay, so back to our earlier conversation. Remember when I said, yes, you can know something that could predict future orders? Did we not say that this was exactly what was going to happen? I was totally wrong on the timing, and the whole thing was like, how do you play it tactically? But I said the Federal Reserve is pushing back against this whole idea that they don't need to raise rates anymore, right? We basically knew what they were going to say, and look at the way that the market is reacting. I knew what they were going to say, and yet the market is still, the S&P 5, or not the S&P 5, I mean, they're selling off too, but the treasuries are just getting absolutely creamed on something that I told you guys about almost 40 minutes ago, right? What did we learn from that? Market is not informationally efficient, but it's statistically efficient. Could that change how you want to trade? Maybe think about it. Yeah, maybe think about it. Of course, anything could happen. Anything. I should probably well, I don't know how I want to do this. Pelosi's still in the air. That's kind of the problem we've got right now. Whatever happens in the coming moments, let's admit it. Nancy Pelosi has some balls, says Anonymous Operations. That I will give her. She's always had balls. She's never been one to just back off. It's true. Okay. Looks like they've maybe come to a slight retracement area. Dally, there's a long way to go on that task. This guy's got to give me a source. I'm going to tell you what the story is, okay? But I'm going to preface this with, this is rumor. I see people that have had good scoops in the past on Twitter talking about it, but I don't have any sources, okay? The story is that the Biden administration was close to firing Treasury Secretary Janet Yellen last week, and that far left, that Bernie and Warren implants and the Biden administration were pushing for her to be fired. And it got so bad that Obama himself intervened to protect Yellen's seat. That is the story. That is the rumor. Is that not insane? San Francisco President Dally, there are some layoffs taking place as economy rebalances, does not see a large increase in the jobless rate coming. It sounds too fantastical to be true, doesn't it, Sharp and Goose? That it sounds too fantastical to be true to me. If that is true, that story could do so much damage to the administration. Can you imagine? Like, that they would think of even discuss firing her as a big problem, but then the story being out would be a big problem for her going forward as well, and it could turn into she just has to resign, and the Treasury Secretary resigning would be like really bad for the economy. Markets would not react well to that at all if that happened. Oh man, that whole thing is kind of a little crazy to once I start gaming it out, isn't it? Ooh. No, not Robert Reich. I actually think I am following Robert Reich on Twitter, but I wouldn't listen to a darned thing he says. That guy has no effing clue what's going on. He is a political operative. You're really careful. There's a lot of political operatives masquerading as economists out there. Yeah, the Financial Juice tweeting here again, the headline, it would be a mistake to get overconfident that we have already found the solution. Yeah, he was the Clinton administration labor secretary, but he well, let me put it this way. If you had been following Robert Reich and making your decisions off of what he says, your trading decisions off of what he says in the last year, you would have lost money. Because he was all in on this whole inflation is transitory narrative, for instance. Him and Paul Krugman, I don't have a whole lot of respect for. There's people on the conservative side that are full of nonsense too, but they're not really popular. Here's you want to know somebody that you should follow if you're gonna trade treasuries. Okay, if you're not following this guy on Twitter, you need to add him. Nick Timiros. That's spelled Timiros. Is from the Wall Street Journal. He posts only about Federal Reserve stuff on Twitter. You gotta follow him. He's the Fed whisperer, man. You want to follow that guy. Well, they haven't been able to fall down through new lows. There is a liquidity hole that is formed at 05 here. Price keeps kind of settling down at the bottom of that hole though, so. So I have seen tweets that the Pelosi's plane has entered Taiwan's air defense zone. So I suppose that's good. It sounds to me like I mean, what the people on Twitter are saying is she's going to land. Okay, we just got jolts. 10.698 versus an expected 11. So I'd say that's bad, but not disastrous. But it does kind of suggest that the labor market is weakening. They really are milking that. Well, I like it. Mark, I totally hate the thing. I'm really mad that the treasuries rallied yesterday off of a headline from that. I thought the whole thing was silly. Oh man, that came back really hard. I'm not very well positioned on this trade. Now, we should be getting Evans speaking now, right? Real trade. Well, I mean, it still matters, unfortunately, Mark. I think that the market is probably going to react when they hear that she landed, right? What highly correlates to the US 30-year, the US 10-year? Yeah, no, actually, you know what? If you're looking for a correlated asset outside of the treasury space to look at for those, you want to look at 6J. 6J is very highly correlated with the treasuries because they're the largest buyer of them. Okay, I think somebody just sold a ton through there, that iceberg. Somebody just bought a ton through there and an iceberg on the other side too. Nah, I don't know what you're saying. FX US 30 to the ZM or RTY or whatever. Okay, so you're probably on like TradingView or gosh, hold on. Do I think that this move concerns me? Don't really see a driver for it. It does look like a rebalancing to me, so I'm gonna stick it out. So what you would want to be looking at is like 6J and ZN, ZB, right? No, those when you pull up like US 10YR on like TradingView, that's just an index, right? To actually trade those, you would have to be on TradeWeb or Roker Tech or one of those exchanges, is where those cash bonds actually trade. There are some index funds that can give you exposure though. Forget what the symbols are for them. Man, right back down to the bottom of this. So Evans is supposed to be speaking now, right? But I haven't seen anything yet. Jeez. Yes, I need to zoom in on the 6J here. Is the 6J coming down with it? Yes, it is. In fact, the 6J is just like right at its lows. Okay. Wow, that was a new low really easily. I mean, that's only 73 contracts into it, but I'm a little... Did they touch that before? They did touch that before in the 10-year. Okay, but there's 30. Like, it was just so... And man, look, and they're going to continue through. Yeah, there you go. So Trading Floor Audio is telling you now explicitly like what I was kind of hinting at before, okay? The fact that Wall Street Journal Fed watcher Nick Timiraos is retweeting ex-New York Fed President Dudley pushing the no pivot line may be significant. The last tweet that he put through was him quoting Bill Dudley, "The Fed hasn't pivoted and unfounded market speculation is counterproductive because it could require even tighter policy." I would say at this point that it is safe to say that the Federal Reserve is unhappy with the way that the market reacted to their last Fed meeting. And they are pushing back aggressively today. And we still got more speakers too, so. Yeah, I'm still getting everything on Twitter, them saying, 30 minutes. No, Chuck Calesto, Speaker Pelosi to touchdown in Taiwan within minutes. That leg, the pullback and then push to new lows in the treasuries was a little stressful for me, guys. I have to admit, I I was really sweating it there for a second. It seems really silly, but I guess I put a lot of pride when I put a trade on, especially since I've said a bunch of things today. Okay, Feds Williams is speaking. So my calendar here said that Evans was going to be speaking. I haven't heard anything from him, and now I just heard something over the news squawk that Feds Williams was speaking. Awesome price. Well, it's definitely interesting movement. The word price action triggers me, so let's not call it that. But Mohammed A. El Arian, and the yield curve inversion deepens, with 2s and 10s now at 35 basis points. A reminder of how far the Fed has fallen behind the first best policy approach and the unpleasant trade-offs that accompany this highly unfortunate situation. Snowflake. I am a snowflake. It's not that. It's just, last few trades hadn't been very good, and I really want to catch something that I can try and let run here today. I felt like you possibly have a really big opportunity here, and I was like stressing that I was going to lose on it. Was not happy about it coming back on me, and I was not happy about where I ended up taking the trade either. Like I should have been in a good 20 ticks before that. Dollar is spiking here, by the way. See, I do not like that. That shit drives me crazy. It's like 5 ticks back up. It's gasping for air, right? Wow, look at that strong offer placed at 17.25. Like, the thing is that with the way that the Fed is pushing back against this here, again, interest rates are below 2.75. Okay, 2.75 would be a 50 basis point hike in September. Okay, so you're telling me they're only going to do 50 basis point hike in September, and then they're not going to hike in November, December? Yeah, unlikely. So yeah, this is a trade that could easily take us into 3% and beyond. But that's why I don't like these. Well, now I'm probably safe, but that's why I was really getting annoyed at those quick pullbacks, because I'm just trying to build something that I can just let run, and when they come back to my entry price, it's a little frustrating, right? It's I took a few weeks where I didn't really put on real risk, and so my body's not used to it. I think is that too. So even though I'm winning, you can see I'm a little stressed out about it. But I know what the trade is. Okay, there's another big iceberg holding it down at 03. There is some risk that they keep coming back to this 05 area, because there was a bit of a hole there, right? But hopefully they establish a new spot here around one. Well, it'd be really weird for them to not trade into 121, right? Well, they traded a little bit into it, but to not clear it, man. See, this is stressing me out. Why? Yeah, that was a pretty strong pullback. I don't like that. This volatility is it's making me a little seasick. A few months ago, the curve was flattening and so many YouTube gurus along with the mainstream media was going crazy. Well, aren't we still going crazy about how much the yield curve is flattening? I remember what you were talking about, though. Everybody's like, it means we're going into a recession. Well, then they changed the definition of a recession. Did you guys see my meme yesterday? No. Let's find it on Twitter. Do you guys watch the Andor trailer? It won't make sense unless you watch the Star Wars Andor trailer. The guy is like, call it what you will, and the guy's like, let us call it war. But we're gonna call it a recession, okay? Is that I thought I was funny, okay? And actually it did okay on Wall Street Bets subreddit. It wasn't like hyper viral, but I thought it was a good meme, okay? You gotta love those Moog filters, man. That's how you get that really kind of sound in the music. Love that sound. Ooh, that's nice. He's got a bit of the trumpet on it too. Oh, that's good stuff, man. What's his bucket that produces these? He is quite good. It looked like for a second they were going to go back down for the lows. The 5-year was really, really close, but they're kind of enough for now. China closes airspace above a Taiwan Strait to all civilian aircraft. Yeah, but they're coming in from the other side. FX Macro tweets, all of the Fed speakers will be hawkish, but data dependent. And the data is improving. He's right. Well, he is right, although I am a little concerned about jobs, right? But like, here's the thing, is I don't think that the Fed cares about jobs. They're willing to forego a decrease in the an increase in the unemployment rate rather for price stability, and they've said that numerous times. So that's not what you want to watch. You want to watch the inflation numbers. Are we seeing the inflation numbers come down? I don't think so. And I kind of get what these guys are saying, that it's like it would be a mistake to come in and see like one print that's a little bit lower than usual and say, okay, we're done, we can like lower interest rates now or something, because then you run the risk of inflation coming roaring right back again, right? John Grady, action in stocks and treasuries is a bit nasty and choppy this morning. Very different from yesterday. Haven't done much. It's busy, but hard to read. The flow is hard to read, especially for the last hour or so, because we were getting some pretty consistent downtrend in volume in the treasuries. Now we're not getting that. I am seeing in the 30-year some evidence of a really strong flattener spread trade being put on, because there is some buying in the ZB, but it's getting dragged down. Carl Quintilla, Fed's Dally says work on inflation is nowhere almost done. Says we're resolute. Fed's Dally says As we get gas price relief, might see more workers willing to drive further for new jobs. That would be interesting. Because right now, I'm not willing to drive very far for a new job. Coding overloaded. I apologize, guys. I'm dropping frames here, apparently. No, it's probably because I'm recording. Hold on a second. Yeah, let's turn that off. That should help a little bit. Okay. It's slippery. I think they could easily fall back to the bottom and push to new lows again, but at the moment, the volume's just not coming through. I am getting some steepening now. Like the 30 years just getting crushed. That's actually a little weird because again, the cumulative delta on my chart at least is saying that they're buying the 30-year, but these guys that are doing it are losing. So that's really, really interesting. I'm surprised that the micro 10's not pushing a little bit harder because of that. They have formed kind of a little range here around 03, and that was kind of a breach of the bottom of the range, but not a breakout as of yet. EHA News reports U.S. Air Force authorized to open fire in case of any Chinese interference on plane carrying Pelosi. And they have a big picture of like a bunch of warships and planes and stuff. Okay, that was maybe a little bit more, maybe more of what you could call a breakout, but yeah, still volume kind of both ways. And again, the 30-year is seeing a little bit more of the brunt of it, despite some evidence of a flattener trade being put on. Somebody put on a flattener and is getting crushed here, man. I don't think I've ever seen anything quite like that before. This could, I'm really interested here. I don't know what's going to happen off of that, but I kind of suspect. My gut tells me that if we get another break of lows, that it could be really, really nasty in the 30-year. Yeah. I don't think I've ever seen this specific situation before. So there's, come on, somebody hit 08. There you go. Wow. Okay. They cleared it and stuck a pretty big offer on it. See, that is, yeah. Oh, okay. Senator Manchin will be speaking with Senator Sienma on the reconciliation bill today. That's important. Noel, how are you doing? Welcome back. I really hate, I'm on Twitter and like you see the same headline get retweeted a bunch of times. They're like, Nancy has entered Taiwan airspace. Well, I got that. Somebody else said that like 25 minutes ago. 25 minutes ago, they said that she was going to be landing. Bid 0405. Yeah. Do you see that? Like in the 30-year, somebody's got their foot on the throat. I don't think that that the flatteners puked either. So like, Kind of makes you wonder. So the thing that I said the first time is that it would be really unusual for you to come to 121 even and bounce off of that. The treasuries, when you get close to a large order like that, it usually trades. It usually trades. So far, though, they haven't been able to get to it. Okay, so the 30-year backing up a little bit now. And it looks like the buyer's still there. I think I kind of need to reset things just because the spread is getting a little bit too extreme. It's kind of hard for me to see. Okay, there's below 08 again. Low latent liquidity at 08. So let's make note of that. Given the circumstances, it's quite impressive that the S&P 500 hasn't been getting hammered here, right? Because you can see higher rates, higher dollar, and that's not very good for the stock market, right? The stock market hasn't really done anything all that interesting. It's extremely choppy here this morning, though. Yeah, still low latent liquidity at 08. Okay, so William Yang says 9 minutes before Pelosi is scheduled to land, Foreign Ministry sent out a press event that's going to happen at 10:30 p.m. It emphasized that the airport will be under control and the event will be broadcasted by the MOFA Taiwan. Okay, so let's say 8:35 my time. Ouch. Yeah, this is a slippery market, man. They're taking 2 ticks at a time. Yeah, only 5 traded at 05 so far. It's really surprising that in the 10-year they haven't traded 121 even, right? So what's the play here again? She lands and nothing happens, bonds move down. Well, so I'm not as interested so much on what the bonds do after she lands, although I do think that she lands, that is because the treasuries bought up yesterday off of news that she was coming. That could mean that after she lands, we could see some more sell volume in the treasuries. But what I'm more interested in is that narrative going away and the Fed pushing back against the market's interpretation of their last Federal Reserve meeting, taking hold and pushing treasuries down. Because that's the one where basically if the Federal Reserve is pushing back against that so aggressively, we could very easily see interest rates back above 3% and beyond within a week. And so that's the play that I'm more interested in. Nancy Pelosi landing just kind of helps that along, right? So we are definitely getting like a descending triangle formation, just because the market seems to keep shying away from these large orders at the bottom. So you see they only traded 202 at 121, and now there's 2,000 contracts on it. Like I said, though, usually when there's a big order, usually it trades. Fire's still at 0607 as well. Yeah, well, so I keep seeing low latent liquidity at 08, so I don't know if there's necessarily a super active buyer at 07 per se, although I do kind of see cumulative delta is just crashing back and forth in the 30-year. So I think that might be more just them getting sucked back into the liquidity hole. But the 10-year seems to be holding down at the bottom well. They definitely, the volume to make it happen should be there. We're getting close to the time where if there was going to be another leg, we could start seeing it, right? It's almost been 45 minutes since that initial strong impulse down ended. So I don't know. At this point, all I get to do is just sit here and hope, right? There's nothing else for me to do. No, not just sit here and hope. I've got to keep my ears open because, you know, there's still the possibility that I hear over the news squawk that Nancy Pelosi has been killed or something, and everything just, you know, the treasuries just skyrocket out the top here, right? So I got to keep my finger on the trigger. Can't relax. It would be insane, right? Especially since we had such a strong impulse down. If that happens, I mean, forget about the geopolitical consequences of it. The order flow would just be nuts. Order flow would just be nuts in this situation. Yeah, or that the plane is missing or something. Yeah. I think this is a good trade. I'm just saying we're kind of sitting on a powder keg here, right? We're kind of sitting on a powder keg here. Yeah, they like that 08, man. See, there was the leg that started at 741 and went to 753. So it was about 10 minutes. So it's been about 40 minutes. They might, so it could be any time in the next 15 minutes. If we're going to see another leg down, we might see another strong leg of a meta order. Let's see. There does appear to be, especially in the 30-year, a fairly decent liquidity hole that they've formed. Okay, so 10 minutes ago, I heard 10 minutes ago, but now Type A officials are saying 10 minutes. If 121 evens hold move is done, orders can come at any time, right? There's definitely some support there, isn't there? I've always kind of felt like that when you get a descending or ascending triangle in the treasuries that it tends to follow through on it. But I mean, that's technical analysis, so we shouldn't try and rely on that, right? You can literally follow her flight through ADS I tried pulling the things up and I couldn't. It wasn't letting me follow her. But yeah, everybody on Twitter is showing the pictures. They're saying that it is on its descent rather. It's a little bit of an overly aggressive downtick there in the 10-year that took them well past where the 5 and the 30 were, but they quickly tick back up. No, it's not missing. Oliver says, I guess 121 evens will trade through then. I think that they're going to trade through it. It's just a question of how long it's going to take them, right? But that's because I think that the bigger picture here is that interest rates need to get back to 3%. Yeah, like the situation is that there's plenty of reason to trade through that, right? And if you're somebody in the treasuries, a speculator going short, and you've got big lots, you know, being able to gobble up 2,000 contracts, I would go for it. But clearly it's more complicated than that, right? Because they haven't cleared it yet. Should we get something a little bit more upbeat here? We can get Roman Bass. Gold has been is a really interesting trade right now, yeah? They've been on a good uptrend this past week. There's been a good uptrend in gold this last week. Although I do fear that if interest rates are going to go back to 3% if gold doesn't get clobbered again. Do you think music has been a good addition? I was really skeptical about it at first, but I think it has been good. I like it. And I think it has been helping the stream a little bit. Like my viewers and activity metrics and stuff have been better. So I'm probably, we're probably extrapolating from too small of a data sample, but it does appear to have helped the stream. So I use Streambeats by Harris Heller's got some royalty-free music to listen to. So good job for him. I remember doing this like a year or two ago before he did Stream Beats, and I was like, I would really like to do music, but it was too hard for me to find music that was royalty free. And I was like, well, I could do my own, but I just don't make that much stuff, right? And if I did, it'd be too difficult for me to like well, not too difficult, but I've never had much success promoting my own music like that, so wasn't really worth the effort putting into it. But he put the money into it and he promoted it and he made bank with it, and I'm super impressed with it. So it was like, it's the guy that did the thing that you want to do and he did it better than you ever could. I'm just really really impressed by him, and the songs are good. Some of the songs are good. Some of them are kind of like, but some of them are really good. He's definitely got the sound design and so forth down. Wow, they see how easily they come down to the bottom when they decide to do it. Only one lot into 121 even though. It looks like they might make a little bit more concerted of an effort, right? Okay, so there's 1300 stacked at 01. Oh, that's interesting. Is there going to be an iceberg at 05 now? Nope, only 383. That was a little bit better of a touch. If it goes down next time, it might be they stack 1,000 on it, and maybe that's enough to pressure it through. It happens like a little bit at a time, right? It's like first time they'd just be like a few contracts, it backs up. Next time, you know, maybe 100 contracts. Then the next time it's like the offer's a little bit higher. Nope, that one they pushed back against it very aggressively. Iceberg 01. Seems like there might be somebody making the play that it doesn't touch 121 even, huh? So I don't know how many contracts he took there, but somebody bought through 05, 0, half, and 01. Okay, there it's offer again. Nah, I really want to see, there you go. There you go. That's what I want to see. Like 600, 700 on the offer. They were briefly more on the offer than on the bid. There you go. See, that might be what it takes to pressure them through it. And we'll see if there's any stops on the other side or not. Seems like a really foolish place to put your stop orders, but you know there's going to be at least somebody doing it, right? What is a liquidity hole that you speak of? So basically, you've got like market makers out there, right? Willing to provide liquidity, okay? What happens if they provide all of the liquidity that they're willing to provide, right? They don't want to take on any more inventory. There you go. There's some stops. Okay, they don't want to provide any more liquidity in there because they've already been filled. Then what happens, right? You get an area of low latent liquidity. It's like every time that it goes bid, there's only like 50 contracts bid. They sell through it. There's only 50 contracts on the offer. The market makers don't want to touch it in that location anymore. And it'll just trade back and forth across that location over and over and over again. So you'll see them. If I come back to a chart, can I come back? And now let's watch this for a second more. That was a pretty good bust through. Next key location we got is yesterday's low at 27, 120.27. Ooh, if they break yesterday's low, then that could get interesting. Okay, so the way that you'll see it in the chart. Oops, I need to reduce this one. Is it'll be an area where it just kind of rotates around it because it's not a very good example today because we have a more what do we call it? It's a more volatile market, but you see this kind of line right here and then this line right here. It's like you'll see it. There was like a big transaction here and then there was all of the market makers were exhausted there and it creates this hole. It's not like a magnet. People think of it as a magnet, like the people will buy it and, you know, there's support and resistance and it's getting stuck by the support and resistance. It's not that, it's a hole. It's like, you know, if you've got a hole like this, right? And you're walking along, you're going to fall into the hole. And if you try and get out of the hole, you're just going to slide back down into it, right? In order to get out of the hole, you're going to have to like build some momentum up, right? So in other words, the hole makes it harder to leave that location. And it takes time. It takes about 45 minutes for a hole like that to heal. And in the meantime, large traders can execute a lot of volume in that location. That's why you get these sort of like bumps in the volume profile, is because of these liquidity holes. So what I'm watching for is, like, when I'm on a trend, is I'm watching for those liquidity holes to form, because that could be potential pullbacks and stuff, right? So right now we had a really strong push through the large order at 121 even and some stops and everything. The risk that we run now is that they get pulled back to the liquidity hole at 01. Although in this situation, again, we still have something that says, hey, this trend could continue for multiple days. Yeah, it kind of becomes a resting point. This is exactly what I would call it. Sometimes in the treasury, it becomes really, really clear because you'll basically see this place on the chart where it stays in a 1 to 3 tick range for like 30 minutes. You're like, what's, it's the most boring thing in the world. But you get to this point where it's like, there's the middle price, 31, let's say 31.5, that trades back and forth. A little bit will trade into 31, a little bit will trade into 121 even, but they're just not able to clear either of those prices, right? That's what a liquidity hole looks like in the treasury in normal action. It doesn't happen only in trends, but if there is a large meta order going on, the way that these guys do their optimal execution is they're going to move it until it creates that hole and then try and get as much volume into that hole as they can. And then when the liquidity hole heals, they're going to push it and create that hole again. So that's why I'm really interested in seeing it in a trend, right? Because that kind of tells me where the trend is going to pull back and where I might be able to try and get in time for another leg. You know what I mean? Does that make sense? So I have a video where I go into this a little bit and I talk about the book where you can learn, because this is based on an empirical study. Okay. If you want to search for the study, it's Walrasian auctions and whatnot. But I kind of picked this up from Trades, Quotes, and Prices, Markets Under the Microscope. And I have a video about the stylized behavior of markets where I go into more detail on this. Okay, I am hearing Pelosi's plane has landed. Repeat, Pelosi's plane has landed. So, not too much of a market reaction on her landing itself. I would have to think that anybody that was trading it landing probably had already taken a trade. Multiple sources reporting that Speaker Pelosi's plane has landed in Taiwan. So basically, the Chinese put up all of this bluster and absolutely nothing happened. What makes it heal is just time. It's actually more complicated than that. So your impact follows a square root law. That means that the size of the order, your impact doesn't scale linearly. It's like this. Ooh, and it kind of, there's a kind of a point at which you don't really get more by adding more. You don't get more impact by adding more orders, right? Follows the square root law. Okay. So we got to move. It'll look like this, right? Now, once that meta order is stopped, it decays. And the decay follows the 3/4 law. It follows the 3/4 law. And basically the way that you can calculate it, if you really want to get into it, is you can look at this. This is going to be 2/5. This is going to be 2, and this is going to be 5. So basically you take the amount of time that it took for this to happen and times it by 1.5, and that's about how long it will take for it to heal. But in the treasury, what you'll find is that it tends to be 45 minutes. It tends to take about 45 minutes for the market makers to kind of rearrange things and more people come in and the liquidity to heal. Now, the thing that you got to watch for, the other part of this is that if you get a big move, and then somebody else takes a trade the other way, because the liquidity behind them hasn't healed yet, you're actually going to get a stronger move the other way. That's why you can get flipped around in positions so easily sometimes. This is why these things like that markets are very responsive to new orders, and that even though you have one lot, you need to consider this sort of stuff is so important. Yep, it's called the stylized behavior of markets. I think is what it's called. I don't remember what the name of the video was. I'll find it. Like, I'll just link it to it. Why wouldn't I just link him to it? This is this one. And I cite the book that we get this information from, and I kind of go into a little bit more of an explanation as to why it happens. Actually, what I just did there is probably a more detailed explanation into why it happens. So there's actually, you can draw a picture, okay? So the way that they figured this out in the Walrasian auction, a Walrasian auction is like what they do in Taiwan, where you can only put in a limit order, and at the end of 5 minutes, all of the limit orders are matched up against each other, right? So you're going to get some people are going to buy like this, right? And some people are going to sell like this, right? And these guys here in the middle, these are the guys that are going to get filled, right? So if everybody inputs new orders, what is it going to look like for the next auction? It's going to look like this, right? There's going to be a hole. This is the liquidity hole that gets formed, right? And what they did was they said, okay, so if you take that, it's 5 minutes. What if we do a 1 minute auction, and then you keep going until you have a continuous auction like the market that we do? And that's where they were able to get this square root thing, where they say there's y, constant y times the volatility times the square root of the size of the meta order over the volume for the period is equal to the change in price, or whatever you want to call it. And they basically showed that this, when you do this Walrasian auction, that you get this square root, and that's where the square root comes from. What was that? Did Pelosi say something? No. You know what? I'm not a very big fan of Nancy Pelosi. I really think that she holds a lot of the blame for the political discourse over the year and the way that the politics have gone. But she is gutsy, and this was an important historic moment. This was an important historic moment, and she did it when Biden was being a pussy. So bravo. Bravo, Nancy. Well done. You're gonna push another new low here? That soon? So I'm still seeing this thing where there was somebody was putting on a major flattener that they don't appear to be getting paid for it. And since they put on there, the volume has just gone sideways. What did she do? She landed in Taiwan. Pay attention. You didn't hear what I said? Nancy Pelosi has landed in Taiwan. Thank you. Thank you, live act. I think that was live action. You're faster than me. Because of Panamela Harris. Dude. So I think that what is going on with Nancy Pelosi here, though, makes this rumor about Janet Yellen so much more interesting. Like, because the Biden administration, it didn't seem like that they wanted her to do it. Right? They said, well, we can't stop you, but we'd rather you not. That was kind of the impression I was getting. If they were then, so they're pussing out on Taiwan, and then meanwhile they're thinking about firing their Treasury Secretary behind the scenes. that really shows, like, you'd think, oh man, the Biden administration is a real disaster. Then you open up the cover and it's like even worse than we thought. It's a very bad set of headlines for the Biden administration potentially to come out here. But that is still a rumor that they wanted to fire Yellen. That is still a rumor. I don't know where they sourced that, but if that gets confirmed, if I read that on Politico, oh boy. Okay, I am getting pictures of her having landed in Taiwan, but they're like too dark to see anything. Okay, but apparently they do have pictures of her on the ground in Taiwan. So it is confirmed video evidence. She is there. So here's another thought. I'm kind of been cautious about sharing these kinds of thoughts because I don't want I don't want anybody to like panic or do anything off of me saying this sort of a thing. Okay, so it's just a theory. Okay, don't trade off this per se. China has been saying there will be severe consequences. What will be those severe consequences? Well, they didn't do anything. They didn't do anything to stop her plane from landing. Clearly, they don't have any ability to stop her from coming from the west of the island, okay? But they could impose economic sanctions of some sort, right? And wouldn't any such economic sanctions that could come out of China because of this be inflationary in nature? I mean, they would hurt China too, but I think that they would be inflationary in nature, right? So that's another thing where this situation actually could end up causing treasuries to sell off more. Okay, so we're at yesterday's low. They breached yesterday's low, but they're not continuing through yet. China needs a buyer for what they need to sell, though. Yeah, I mean, that's the thing is it would be limited sanctions, right? It's not like they would just cut off all trade with the United States. But I do think possibility that whatever China ends up doing off of this could be slightly inflationary. Wow, spot palladium falls over 6% today. That's odd. Gold has not really moved all that much. Neither has oil. So really interesting to me. Oil like really got creamed yesterday and didn't do anything today. It's a little weird, don't you think? That was some real volume there on that push. So they were coming back there and kind of saying, oh, maybe we will bounce off of yesterday's low, and then wham, wham, wham. They just got pummeled there down to the lows. I'm feeling pretty good now. I think that this is where I need to keep myself focused because I can sometimes get a little bit too happy about a trade going my way and miss something, right? So let's stay focused. Might be a time to buy battery company stocks and chip makers. Well, it's already been a time to buy chip makers, hasn't it? Because of that whole bill. You guys been following the situation with the Senate bills? So apparently the Republicans were negotiating with the Democrats to get this CHIPS bill signed. Basically, they want to help promote these American chip makers, and that could possibly mean more jobs in the United States. And there's been this other thing, which is that the Republicans don't want to do anything with the Democrats because the Democrats want to pass this big bill that would have been inflationary and has a lot of green spending in it, right? So Manchin says, no, I won't support that bill, but we need to do the CHIPS bill. So they pass the CHIPS bill, and then as soon as that happens, they're like, oh, actually, we made an agreement and we're going to try and pass this green bill. So all of the Republicans felt very, very betrayed. And then the kicker on all of this was that then there was another bill relating to veterans benefits. And at the very last minute, the Democrats attached like $400 million of mandatory spending onto it. So all of the Republicans voted against that. And then the Democrats went on this big media spree saying, oh, the Republicans don't support veterans. And neglecting to mention the whole, oh yeah, they added $400 million of mandatory spending on it, right? So the Senate has been just a mess. Like, I highly doubt that the Republicans will work with the Democrats on anything else until maybe after the midterms, because they just the Democrats. I don't know how big of a damage it was, but it looks to me like the Republicans got burned by the Democrats on those deals. They always tack on a bunch of BS. Yeah, it is. They just... I don't know what you do about that. Are bonds buying because she landed? Bonds aren't buying right now. They're selling, right? But I don't think that they're selling because she landed. It could be a factor. While it probably is a factor. But I also think that the bonds are selling off because the Federal Reserve is pushing back against this market narrative that there's going to be a Fed pivot. The market has been saying there's going to be a Fed pivot, and the Fed is saying no, we're not pivoting. Like I wish I could find it again. It would take me too long to find it. But one of the speakers said that this market trying to pivot sort of the thing could be really damaging in the long run, because it could force the Federal Reserve to tighten policy even further. Basically, they're saying, like, you guys have to sell off and you need to get interest rates back to 3%, or it's going to take us even longer to get inflation under control. Right? Well, that was a pretty... I didn't see anything. That was a pretty aggressive move back up here, though. That could be some profit taking. Could be guys saying, oh, Pelosi's going to land. They take profits. The micros trade opposite to the ZN. Right? Treasuries sold, yields rose. Prices and yields are opposite of each other. Intraday calls was getting cheap Seth near this low on ZN. That's interesting. So the thing here is that I would really want to see this go to 3%. This is the thing. I really want to see this go. I think I can afford to hold it. Yeah. So think about that. If this works out, where is 3? If this works out, it's going to be like a $400 trade. Could be even more than that. It could be a $400 to $600 trade, swing trade. We'll see. We'll see. That's why I'm saying, like, I want to hold it and I want to let it run, but I've got to be paying attention because we're in a situation where a conflicting headline could spike us up very quickly. I was a little bit concerned by that pullback that we had there. I think that was well within the bounds of what the liquidity is going to do on a pullback after a move like that and everything. But you know, it could have been news, so I was like checking there, making sure that I wasn't missing something. For those who like this, you can now see the tankers and reconnaissance airplanes around Nancy. I'm long a micro yield contract. Pelosi. Our visit is part of our broader trip to the Indo-Pacific, including Singapore, Malaysia, South Korea, and Japan, focused on mutual security, economic partnership, and democratic governance. Our discussions with the Taiwan leadership will focus on reaffirming our support for our partner and on promoting our shared interests, including advancing a free and open Indo-Pacific region. American solidarity with the 23 million people of Taiwan is more important today than ever as the world faces a choice between autocracy and democracy. Our visit is one of several congressional delegations to Taiwan, and it is in no way contradicts longstanding United States policy guided by the Taiwan Relations Act of 1979, U.S.-China Joint Communiques, and the Six Assurances. The United States continues to oppose unilateral efforts to change the status quo. Are yields the same as or a reflection of interest rates? They are a reflection of interest rates. The micro treasury yield future is supposed to track the current on the run, which means the most recently issued 10, 5, whatever year bond it is. So the one that I'm in, it tracks the current on the run 10-year yields. There is a basis difference between the future and the actual cash bond. Okay. This is going to be a like 4 basis points higher. I wish micro rates had the same volatility like micro golds. Okay. I mean, I don't like volatility, so I'm not with you. So this could still be just within the range of the volatility. I am getting some hints though that might be the extent of the move for today, or at least for a while, right? I guess we could sit and wait. Oh, you know what? I've got to go, guys. I've got distracted. Hey, I'll see you later.